And in our top business story, passenger traffic at Dubai International fell by nearly 3% in July, but remained above the 5 million mark for the 19th straight month, according to new figures released by Dubai airports. Passenger numbers slipped 2.9% to 5,155,771 from 5,310,361 passengers in July last year, with traffic impacted by Dubai International being reduced to single runway for a period of 80 days from May the 1st, as the airport's two runways were consecutively refurbished and upgraded. Both runways were reopened on July 21. Passenger numbers rose to nearly 40 million in the first 7 months of the year, climbing 4.9% to 39,831,861, up from 37,972,464 passengers recorded in the same period last year. In July, Dubai International handled 25,081 traffic movements, down 11.9% from 28,462 in the same month in 2013. The declines were driven by the continued shift by home carrier Emirates Airlines to larger aircraft such as the Airbus A380, taking average passengers per movement during July to 211, up 5% from 201 at the same time last year. And with all dedicated freighters moving to Al Maktoum International at Dubai World Central from the 1st of May, both monthly and year-to-date cargo volumes at Dubai International registered a downturn. In July, cargo volumes reached 184,720 tons, down 10.7% from the 206,945 tons achieved in the same month in 2013. Year-to-date cargo volumes reached 1,367,967 tons, down 3.1% from 1,411,896 tons, recorded in the first 7 months of 2013. Leaving behind 5 years of high provisioning and low profit growth, GCC banks are back on track, reporting double-digit profit growth according to key performance indicators in the first 2 quarters of this year. Net profits of GCC banks increased 11.1% year-on-year to $5.3 billion in the second quarter of 2014, with Kuwait leading at 20.7%, followed by the UAE with 20.1%, Saudi Arabia 7.4% and Qatar with 3.5%. The strong earnings growth is largely attributed to higher net interest income, non-interest income, and a 7.7% year-on-year drop in provisions, though an increase in operating expenses partially dampened the profit growth. Among UAE-based banks, Emirates NBD reported 34.7% growth in net profit due to higher net and non-interest income. National Bank of Abu Dhabi reported 17.5% second quarter growth in bottom line, mainly due to strong growth in non-interest income and a huge decline in provisions. Abu Dhabi Commercial Bank saw second quarter profit rise 21.7%, mainly due to a huge decline in provision expenses. First Gulf Bank reported 15.7% growth in its bottom line the second quarter, backed by strong growth in net interest income and non-interest income. During the second quarter, the overall operating expenses of GCC banks grew 4.6% to $3.3 billion, primarily driven by the UAE with 10.8%, followed by Saudi Arabia at 8.3% and Qatar 5.8%. After a significant rise in the last quarter, the operating expenses of Kuwait-based banks declined 8% in the second quarter, helping them improve their bottom lines. The US dollar turned in another strong performance during August, closing its second consecutive month of gains and outperforming its major counterparts across the board. The dollar index, a measure of the value of the US dollar against a basket of major currencies, has appreciated more than 3.6% since the start of the third quarter, and most of these gains can be attributed to slightly improving sentiment surrounding recent US data flow, along with deteriorating sentiment from the Eurozone. The euro slipped more than 1.9% against the US dollar during August to close the month at its lowest level in under a year. With the US non-farm payrolls report due out on Friday, preceded by the ECB rate decision on Thursday, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, about what promises to be a week of heightened volatility for markets.
Well, we saw another solid closing week for the US dollar, and in a whole, it was another excellent month for the US dollar as it closed August 1.5% higher against a basket of currencies. Now, overall, we've seen a stronger flow of US data. We've seen stronger than expected jobs growth from the US. We've seen increases in the overall GDP reading, which came in at 4.2% at the end of last week. But a closer look at the figure shows that all is not well over there, as we've seen that consumer spending and personal spending figures have actually shrunk during the month of August. Now, of course, consumer spending makes up more than 60% of the overall GDP reading in the US, so we need to see slight improvements in the personal spending figure to actually get a better accurate reading of how the output picture looks in the US. But overall, the trend in the upcoming week looks to be favoring the US dollar. We expect continued downsides in the euro. Of course, the ECB policymakers will be meeting at the end of this week on September 4th to discuss future rate decisions as well as future monetary policy for the eurozone. Of course, we did see unprecedented measures from the ECB back in June when they introduced liquidity channels up to 400 billion euros, and we did see them cut the deposit rate to minus 0.1%. But although we don't expect any rate cuts in the week ahead, we do expect some kind of asset-backed security purchase program being introduced by the ECB as we continue to see dips in the inflation in that region. Overall, we expect the euro to probably test 1.28 levels. This is, of course, if we see a break of 1.30 in the week ahead, but overall, the trend will remain dollar bullish in the week ahead.